All right, I'm going to do a market update post-employment report. The report was a little weak. It's had some effect on the currency markets. Um, Not much effect in the stock market other than to accelerate the trend that was already in place. And I told my subscribers last night that I didn't think it would matter either way. A good report or a bad report wouldn't make any difference to the stock market. The stock market had completed an intermediate cycle low, and the trend now would be up. Um, I guess the main market that's being affected is the currency markets. And if you have been listening to the bulls, the biggest bull has been Martin Armstrong, and he has just been wrong on the currencies for over 2 years, 2.5 years now. The dollar topped back here in early 2017, and we had to move down into the 3-year cycle low, and then we had this bounce out of the 3-year cycle low. It's been a very weak bounce, not even remotely close to taking out these highs, despite all the multiple reasons the bulls will cite for why the dollar has to go up. Uh, the only thing propping this market up at all is the ECB trying to um, keep the euro suppressed, and the Bank of Japan doing the same thing with the yen. You take away that currency intervention by both those central banks, and the dollar would have collapsed a long time ago. But even that is not going to be able to keep this thing propped up, I don't think. So let me zoom in a little bit here. You can see this. This was an intermediate cycle low right here. This has been a very weak rally. Lots of um, volatile behavior as we're getting these multiple currency interventions. Um, as when the dollar's going up, the euro's going down. When the dollar goes down, the ECB and Bank of Japan will intervene again. You get these violent rallies back up, and then the fundamentals drag it back down. More interventions, on and on. Um, Now we have almost certainly created an intermediate top because we've got a lower low here. That's a sign that the intermediate cycle has topped. I I do expect the ECB will come in first thing Monday morning and try and push this back up, but um, I think it's hopeless at this point. I think the dollar is going down. We're moving down into an intermediate cycle low, and it should have weeks to months yet to run. Of course, with the dollar in an intermediate decline, that's going to be bullish for gold. I've been saying for a long time that one of the big bullion banks got caught here. They were not able to create the bloodbath phase, and this is a short squeeze as that bank has gotten trapped in that short position and they can't get out of it. Now, that being said, uh, gold is pushing up into a major resistance zone here. While it's not at all unusual to recover the previous intermediate top during a first daily cycle, which, as you can see, gold has done, it's going to be another thing altogether, I think, for gold to push through all of this resistance right here during this first daily cycle. So um, I suspect while we may get above this peak here, I really doubt that we're going to get a sustained move past this resistance zone. So I don't think you need to be chasing the metals. If you got in down here like we did, then you're fine. But if you've been sitting on the sidelines the whole time, this is probably not the spot where you want to start buying right as gold is pushing into this heavy resistance zone right in here. And then finally, of course, back here I noted in one of my daily videos that the stock market had completed a swing, and the odds were very high that the intermediate cycle had bottomed. That, as it turns out, that was correct. We've got a bottom here, and it looks like we've got a kind of a slingshot move back to the upside. I see a lot of the perma bears. They can't let go of what happened here, and so they're expecting the same thing to happen. This is a completely different scenario. This is just a run-of-the-mill intermediate cycle low, and a very mild one at that. This was a 4-year cycle low, so to expect this correction to mirror this correction is irrational. Completely different environment, completely different cycle timing band. Um, the odds are very high at this point that this was the intermediate cycle low, and market is probably going to make new highs, and this may be the we may finally be set up for the semiconductors to break out above the 2000 high, which is at about 1362 here. We're kind of a little above that right now. Got a lot of resistance here. We made an attempt at it last month, and I noted at the time that it was too late in the intermediate cycle to expect this breakout to be sustained. But now we're starting a fresh new intermediate cycle, and I think this one does have the potential to break out above the 2000 top and then run for many years yet, 10 or 15 at least. So I do think there's a lot of potential in the semiconductor indexes right now.